Well, all right, a good day to you all. Sam here with you on a, what are we? Thursday, February 28th, last day of the month. And as we do every day, we put out a vote amongst our members to see what coins will get a video analysis. And number one with a bullet today was Walton to Bitcoin. So I've got it here. This is a 4-hour on Binance. Now this is some mixed emotions here. So that we've got a really strong technical pattern, and this is a favorite coin amongst a lot of people that send me their thoughts on the fundamental potential of this project. And I'm very surprised to see this. So here it's only been around for 7 months. We've got a market cap of about 550 million. But this scoring here is low. This is the troubling part of it here. We have a 0. I'm not sure what's causing that. That's slightly problematic to me. That's developer interest, and you can read a little bit here about how they develop this scoring system. So that might warrant a little bit of digging. That's moderately problematic. I'm sure I'll get plenty of comments or emails or tweets about why that is irrelevant and how strong this project is. And truth be told, this is something that I've got a long-term hold on. So, I'm not shying away from this project, and I'm not discouraging trading it. Just making a note of that. All right, let's go take a look at it here. So almost all of the trading here is to Bitcoin, and it's on Binance. So I've done a little work here on this. So this is from its inception here. I've just wicked off the absolute low here. We see it's been very technical. So we got a nice clean 5-wave into a 1-wave here. I mean, that couldn't be any prettier. We get a long 3-wave, a deep second, which is not uncharacteristic. The second is you can call it base building. So you could think of it this way. It's in this case it's not as much a push for the new lows, but you get this big area down here where you've established support. Really, you're just coming into the coins, just getting off the mark here. So you could call it an accumulation zone. That might be a better way to phrase it. This is, if the project was going to fail, then we're pushing down here. I mean, we're almost to 0. So this is just the people that made some money here, selling it off, taking some profit, and the market, reestablishes this as a baseline. But it plays as a 1-2. Because it goes just beyond the 786, and we get this nice 3-wave structure here, and even good subdivision here. Looks like an ending diagonal to finish that C wave. But then from this basing area, this accumulation zone, then what was that? That's December 8th of this month, we get the rip higher. So it's pretty reasonable to look at this as a 1-2. You could say, it's a recycle and we're just getting started. But I think this is very tradable here as a 1, 2, 3 because of so you can see here 5 waves, 3 waves, 5 waves, with this big push here. So you can look at it and go, okay, well, if that is a 3, let's do a little checking here to see if it makes sense. See if it's trading characteristically of a 3rd wave. So some easy things we could do, right? So we could grab our alternate price projection tool. We'll just take our absolute low here to the high of the proposed 1 wave. I can get it right on there. And then I can pull it over here from the low of the proposed 2 wave. And we can see here the highest probability zone for a 3rd is up here between the 1618, 175. And while we get a bit through it, we can see here we tap the 1618, we get a little bit through it. So that continues to confirm, in my view, that we've got a 3rd wave here and not just a complete up-down recycle and that playing as a 1. Still, correcting that entire move. So just a few other things we can do just to get a sense so we can see the very clear subdivision here. We get the 1, here's the 3 wave, 2, big rip for the 3rd. So, of course, you'd want to check that just to see, again, is it technical? Are algorithms in here? So if we work from our 2 low here up to our 3 high, well, that's pretty telling, right? So what do? Right to the golden pocket, right? And then rip right to algo target. That's about as clear of evidence as I can put in front of you just to confirm to you that algorithms are in there. It just doesn't get any cleaner and clearer than that here. They defend it right up to the 65. And the other things you could do, you say, okay, wait a minute. I don't buy all this Fibonacci stuff. I'm an old school. Well, here's prior resistance to the tick. You want to think of that as, so an Elliott trader sees 1, 2, 3, 4. We don't overlap the 1. You're a traditionalist. Well, there's prior resistance offering support to the tick. It's hard to argue with that. If you've got a counter argument, I'd love to hear it. So what does that show me? That shows me that algorithms are in here, and so here, buying the golden zone, hit the target. Look at the reaction from the target. That's the tell. Right, as I always would tell you, it's not the 618, it's not the 50, it's the reaction at the target that confirms the algorithms are playing it. Okay, so what do we got now? So we've got a 1, 2, 3. We're getting a fairly decent correction. So all we're doing is correcting from the 2 low to the 3 high. This is an internal correction. As long as we stay within that wave, we're putting in an internal correction to this 5-wave structure. Right, so you can see here we've come to the prior wave 1 high. We've gone through it. So that would imply that now we're in a diagonal. Does that make sense? Well, can we have 1, 2, 3, 4? Well, that's going to affect our targets a little bit. Excuse me. So we would now here be looking if we're going to get up for a 5th, since we have the overlap now. So the first thing we're going to check, we're going to look for the length of the entire move from the absolute low here to the 3-wave high. And where are we? Well, so far we've just tapped the 50. Excuse me. We've just gotten a little pop here at the 50. So if we dig in there, let's go down to the 1 hour, and so that would imply we've got, if we're going to get down here a little bit further, we might have a revisit to the golden zone here. We can tell, from this reaction here, you can see it from this reaction, we might have a revisit. So markets tend to form personalities. So you'll find that they'll react at either the 50 or the 618. This certainly would suggest that there's a response at the 618. So market seems to like that zone. So there's the reasonable to imply that there could be one more push down here, but we don't want to assume that. We're sitting here where we know algorithms will start buying it, and all I'm doing is going swing low to swing high. Well, there's the 50. You can see a little reaction here already. We had a dip through it, reaction, it rolled over, being defended again. Well, can we as Elliott traders dig in here and see, well, what are the odds of this going back down to complete this in a 5-wave structure? We can dig in that and see how that looks. So let's go down to a 1 hour. And let me open this up a little bit. So we'll tighten these. You get a little drift when you change time zones. Or time frames, I should say. That's right on it. So that's our proposed 3 high. So if we look here now, there's our 3 high. So we get a little A, B, clear 3-wave B, and then we get this rip down to complete the A wave. Okay, so there's an A, we get a 3-wave B, correcting this, right? So it's A, B, so that looks like it's fairly technical. So if I pull from my high here to my proposed A low, well, as is not uncommon, we get through. So a B wave, like a second wave, can go beyond the 6.5, right? So it's not uncommon. It's a push to get to new highs that fails. That's what creates the B wave. So it's a push to get to new highs. It rolls over and we create the B wave. Just like a 2 wave often will be a push to get to new lows that fails, that gives you a higher low. In this case, it's a lower high. So here's the high, up. That would be the first A. Here's the second B. It's a failure. So we get a lower high, rip down, come up again, lower high, rip down, come up again, lower high, rip down, come up. So we have a trend, right? A trend is defined by a downtrend, defined by a series of lower lows, lower highs. So you can see we're trending down. Now we look at that and go, okay, well, if we're putting in some complexity here into a 4th wave, this is nothing we wouldn't be anticipating. So if we look now, so A, 3-wave B, okay, so could we be going now into a 5-wave here? So we might have A, B coming into a 5-wave to complete it for a 5th in the C. So we got to dig into that and say, okay, well, this certainly plays from an Elliott perspective as a B wave. A, B. Now, so we're looking for 5 in the C. If I can get this off. So does that make sense? Well, then we'd have a 1, 2, right? So a 2 wave, much like a B wave, 1, 2, can't get past the pivot here. So we'd look at that and say, okay, well, does that make sense? Well, here we go again. So we go exactly the same, just as did. We get through the 6, 5, but the 7, 8, 6 holds it. Plays like a 2 wave. Well, where do we go from there? Right? Here's the algo target. All right, swing low. For whatever reason, they stay with it. Down we go right to algo target. Here we get the first reaction. Now, is that the absolute hard low because of the algos getting their target here at the 3? Well, as Elliott traders, we're suspicious of that because we're looking at this going, this looks like we've got an ending diagonal. So we've already overlapped the 1. So we could be playing this, so we could have an ABC in here for the diagonal. So this at first glance would look like we've got an ABC in here to complete the 3. I don't want to do that. So let me get this down a little bit. So that could be, bring this up here for the ABC. Let's go into a larger degree so that makes sense. We'll go up to minuet. Okay, so diagonal. We could have, this is our 1 wave, 3 wave B, 3 wave into the 3rd. Looks like another 3 here. So we could be ending in a 3, 3, 3. We'll see what we get here for the 5th. So that certainly plays as a 2 into a 3. We know that was a technical pivot, both because of the algo target. In addition, we've got the 50 sitting right there. So we're seeing some buying coming in. So let's continue to try and refine and see if we can determine a cluster, a confluence zone that would support our theory that we're going to get an ending diagonal here. Well, so we take the length of the 2 to the 3. Here's the 4. Right, so we want to check that one coming just shy of the 38, so that would be consistent. But because it's a diagonal, we want to take the entire length of the from the start of it to the, so it would be the start of the 1 through the pivot at the 3rd. So now we're a little shyer here. So now we're, do it here. So we're in between the 23 and the 38. You know, high probability zone for a 4th. Certainly plays. So 1, 2. Into our 3rd. Here's our 4. We're going to get one more push down here for the 5th. Well, look what's happened. So from the length of that here, even though this is shallow, look where our algo target is sitting right here, this green. So if I wiggle it, do you see that right here? So I put it right on the low. We're right in the golden zone, just adding more potential confluence here to this area down here as a place we might be looking for a reaction if we're going to get there. Nothing says we must get there. We do not have to go down there. But the way this is trading, it would suggest that if we're going to complete this in 5, we'd be looking for this to come down and complete that 5th. So we can start measuring. So if I take this off just to clear up the chart, we start measuring that and say, okay, 1, 2, I'm going to look, just like in a diagonal, we're going to pull from the length of the start of the 1 to the end of the 3 to look for our 4. When we're projecting for that 5th, we're going to use common relationships here that are found in diagonals. So we're going to take the start of the 1 through the length of the 3rd and project it from the 4th. And a common target would be the 618 and the 100. Well, this is more common here, so we can see now we're getting a little confluence with that as well. So if I wiggle it here, you see that 618, the length of the 1 through the 3. And that's lining up right in front of the 65, right behind the 65. So adding more confluence to this zone. Again, we don't have to come down here, but it's certainly setting up as a contender if we're going to push, retrace, and then get one more push down. See what I'm after here? So we've had a push down. Here's potentially the 3-wave retracement, and then there's a reasonable expectation that we get one more push down into this zone. That would complete this. So if I put the wave on that, you can see what we're after here. Okay? From the start of it here. 1, 2, 3. We overlap the 1. Now we'll have to drill down into that to see if we're going to get, so we might get a 3, 3, 3, 3, 3 coming down to it. We'll have to wait and see what we get within this. But so far it looks like push retrace. We'd be looking for one more push down. So stepping back from all of that, does that? Let's go to a 2 hour. Let's see how that fits into our larger projections here. So if we break this, we've got some other targets down here. We would not want to see that. But the reason I like that is because I've got, if we come down here and we get the opportunity to be buyers here, I've got clear indication of where I just don't want to be chasing the long if the 4 is going to go any deeper than the 65. So I'm happy to buy it there. So the reason I like that is because my risk reward is so good. So I can be looking for this heading towards that 5th, but I don't want to take it beyond the 65. So even if I give it a little cushion to accommodate for the 618, remember I showed you that just on the other side, even if I give you that a little cushion, and I'm looking up here for at least new highs. So here's the algo target from that, right? So we'd be pushing up for that high. So if I open that up, what do we get there? Okay, that's 16.27 to 1. Again, you know, as I like to tell you, that's your job as a trader. You got to take that trade. You have to take that. There's just no reason not to take that trade, given the risk reward ratio that you've got here. So let me just visually look at that, the amount that you're risking for that potential reward. You know, and so you can throw all the Elliott wave out and you just say I'm going swing low to swing high. That's the 618. That's the golden zone. That I don't know, why would you not buy that? Well, so you might say to yourself, well, I don't believe in this project because look over here, we've got this problem here. We're not at 50, as you always tell me, Sam. I want to look for coins at 50 or higher here. Well, that's true. That's true. So a point of caution. So what all that does is reinforce the fact that you don't want to risk a lot here until this stabilizes or we get more developer interest, or again, somebody explains to me why that's so low. Why that scoring is so low amongst developers, which I'm going to guess somebody's going to explain to me why. Until that's the case, you got to approach with caution here in terms of its long-term potential. But as a technician, that's a must take. Now, and we don't know that we're going to get there, but we certainly have the potential for that to develop. So that's one to watch. Yes, we're here sitting at the 50, and we very well could just do this. We could just tap down here. You could call it a truncated 5th. For whatever reason, we may not get that push down. We start to take off here. Okay, well, that's not the end of the world. So potentially this could play as a 1-2, right? Up we go. If we get a 3, well, that's going to subdivide. So then we'd be looking for the first pullback off of that. Maybe we're starting off into a 5-wave sequence going up. So the 4 would be a contender. Can we get through this 6-5 on the way back? Then you got to get through all of them. There's the big one up here, swing high to swing low. You got to get through that 6-5. Get the algos to switch. If we're going to go up here, we're not going to go straight. Likely going to subdivide. So this is a coin to watch. This is a project to watch. Really, the trade we're looking for, and if I know my members asking me to review it, what they're looking for is the buying opportunity. Can we get this to play right into our roadmap here and give us that? It would just be technically perfect. Give us the opportunity. So look at that risk reward. Now, so I've had people, very frustrated because alts have been, for quite some time here, just going down, 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 down. So a lot of stop outs, a lot of scratch trades, a lot of frustrated traders. Welcome to trading. Get used to it. But see, what I'm trying to get to here is that how many of those do you need? Not many. Not many to catch that run. Now, and again, I'm looking here, that would be your long-term target. Again, we're not going to go from here straight. So there's going to be lots of opportunities to leverage that along the way. Partial profits, take some profit, reload, add to it. If it's following the roadmap, you've got the I've said before, it's an unfair advantage is what you've got. You've got an unfair advantage. Now, how you play it along the way, that's dependent on your skill as a technician and a trader and your money management and your risk tolerance and, all of the good skills that define a good trader. Someone who can be patient, who, despite the fact that we've been in essentially a bear market in alts, and you could make the same case that, we're still correcting in Bitcoin, from our high at 20K. It's not been easy trading. It's no question about it. It's been hard trading. So you got to just position for these because it doesn't take many to get well. It does not take many of those. And sooner or later, they hit. If this is going to play as a 1, 2, 3, 4, 5, eventually, just the nature of the markets, You know, unless crypto's going away, which I do not think so. It won't take many of those to turn your whole year around. Or if you're just getting started, make for a hell of a start to the year. All right, guys, I'll stop it there.